you're retired or planning for retirement and you're only thinking about how much assets you have, you're only looking at half the equation. Although how much assets you have is important, what's even more important is how much cash flow is being generated from those assets. In a business, healthy cash flow is so critical. It's the amount of money that's flowing to a company's bottom line. The more cash flow that a company has, the more financially secure that business is. The security of your retirement should also be measured by the amount of cash flow that's coming into your bank accounts. The more cash flow that's coming into your bank accounts, the more financially secure your retirement can be. There's an old saying that cash is king, but why is cash so critical? First of all, cash offers liquidity, meaning it's accessible when you need it and for whatever reason you need it. It can pay for your everyday expenses and necessities, as well as support your ideal lifestyle. Cash can also be used to pay off debt or avoid debt altogether, which is the #1 wealth destroyer. And above all, cash weathers disruptions. It provides predictability in a very unpredictable world. So if you're no longer working and you need to generate cash from your investments, how does one go about doing that? Dividend investing requires you to invest in companies that have a committed dividend policy where they pay dividends to their shareholders. With dividend investing, you're never forced to sell. In fact, you get paid to hold on to your shares, so there's no timing involved. Another great way to look at dividend investing is to compare it to real estate investing. If you've ever bought an investment property, you have two choices. On one hand, you can buy the property, fix it up, and then sell it to someone else, hopefully at a higher price. This is called house flipping. The other option with real estate is to buy an investment property, rent it out, and collect those rent checks and sell the property at a later date if the timing is right. Investing in stocks is very similar. You can flip stocks, hopefully to generate a capital gain, or you can invest in dividend stocks that will pay you regular quarterly dividends, and you can sell stocks when it's in your favor to do so. Investing in dividend stocks is actually quite easier than owning rental properties because you don't have any tenants to deal with, you don't have any properties to manage, you just sit back and collect your dividend checks. So what are dividends? Dividends are regular cash payments that certain corporations pay to their shareholders. Not every company pays dividends, but there are many that do. Dividends are usually distributed from the excess profits that a company makes. Dividend checks are normally distributed quarterly, and they can be directly deposited right in your bank accounts. The best part about dividends is it doesn't matter if a stock price is up or down when that dividend is being paid. The amount that you receive has no correlation to the price movement of the stock. Dividends are declared by a company's board of directors, and it's based on how many shares you own, not by what the stock price is. Dividends are actually a very reliable income source, and there's many companies that have raised their dividends each and every year. And if a company raised their dividends for over 25 years in a row, they get known as a dividend aristocrat. What better way to deal with the huge risk in retirement known as inflation? The best way to battle inflation is to make sure you're a shareholder in those companies that are raising their prices. So in retirement, it is so important to manage the cash flow of your investment portfolios. You want to make sure that your investments are generating healthy cash flow so you can worry a lot less about market fluctuations.